I'm just going to hand over to T, who's going to introduce the session.
Yes, so the company is an Irish headquartered paper-based packaging business. Just mentioned Smurfit Kappa. We bought into this company in May 2013 on the basis that we believe recycled cardboard was fundamentally a more sustainable packaging material than other materials on the market. It has been a strong contributor to the fund performance during the period, having doubled in price since then. But the local Irish market and the MSCI world has gone up only 50%. We're going to hear from Garrett Quinn, who is the head of investor relations, and who joined the company as a graduate trainee back in 2000. Garrett's going to spend 10 minutes introducing the company to us, and then he'll join the panel with Seb, me, and Stephen Stoffer, who's the Group Vice President, Development, and is responsible for sustainability at the company. And then we'll further discuss some of the key aspects of Smurfit's business from a sustainable investment perspective. And then we get some questions from the floor. So, Garrett, over to you.
So, yeah, a bit of a party political broadcast here on my part. So, very quickly, hopefully some of you will have heard of us. But we are the type of business that you see our product everywhere. You don't necessarily know that we're the people that make it. So we are the #1 corrugated box manufacturer in Europe. We're the only Pan-American producer of corrugated packaging. Corrugated packaging sounds quite technical. It's the box, and hence why we put the picture of a Danone box that we make in Colombia down on the left, and the Zalando corrugated box, which we make for one of the leading e-commerce companies in Germany. 46,000 employees operating in 35 countries. You probably struggle to see the yellow dots. But from Canada down to Chile and Argentina, everywhere in between. But the stronghold and 75% of our earnings coming out of Europe. And 64,000 customers, also just an important one, because a lot of the time, sometimes people feel you're overly reliant on one or two customers. Down arrow. Here we go. Okay, so from a financial performance perspective, this is just a bit of a snapshot. I'm not going to go too much into the detail, but hopefully what you get a sense from us as a business is hopefully you feel, yeah, we're running it well. You can see return on capital employed, moving away from economic cycles. 2007, return on capital employed of 11.3, and a return on capital employed last year of 19.3. So hopefully that shows that we're good stewards of capital and getting the higher returns as a result. And then you can see the quantum of EBITDA coming through quite nicely as well. We are a leader in a long-term growth industry. So being #1 in Europe, being the only Pan-American supplier, so what? And how does that look for the future? This is going back to 1990. It's data from a research house in Canada, Numera Analytics. And you can see that, yes, you have the odd kind of hiccup with the great financial crisis in terms of consumption, but the long-term trend for consumption is up. Why do we think it's going to continue that way? We think it's going to continue that way for some obvious reasons and maybe some not so obvious reasons. The one which is very prevalent and arguably to today's content is this whole anti-plastic is maybe too simple a way of describing it, but let's run with that. It's the whole reaction to Blue Planet that started back in Q3, Q4 2017, and this kind of social drive to remove plastic and unnecessary levels of plastic in the supply chain. And I'll talk about some examples of how we're seeing some intense activity with our customers and with retailers on the back of that. The e-commerce piece is probably the more obvious one that you'll all know when you order online. Typically, it comes in a corrugated box, so that is a strong secular driver for our industry. And then maybe the lesser obvious one, but you'll see it when you look at the Kantar statistics on the retail market in the UK, is the growth of the German discounters. So when you see these disruptive forces of e-commerce and discount retailers in the retail market, actually it's good news for us because they're more intensive users of corrugated packaging. You go into a German discounter, typically they won't just use more corrugated, but they use better quality corrugated. So they use more added value product, which is good for us because it's increased margin as well as the increased consumption. I won't dwell too much on this because it is quite hard to do it in a slide, but beyond just the secular drivers specific to our industry, as the leader in the industry, we believe that we offer an unrivaled market offering to our customers. We pretty much, I think, any brand you can think of, be it big or small, we will deal with across the globe. Why? Because the technology, what we offer them, if you go onto our website, there are videos that explain in 90 seconds, hell of a lot better than what I would try and do in this slide. But we have experience centres all over the world, 26 experience centres. So if you ever want to come and see what we do, how we do it, allow us to convince you that it's not just marketing. Hopefully that's what you get a flavour from. As I said, the website and the videos do a much better example. So I'm just kind of going through these slides a little bit quickly because I'm looking at the clock and I want to just give you some more topical and thematic stuff as well. I think, again, back to the EBITDA delivery. So you're seeing that we're hopefully allocating capital well, we're getting the returns, but we're also doing that against the backdrop of prioritising a stable balance sheet, a safe balance sheet, and also as a business, probably one of the maybe the underappreciated aspects of our business is the strength and the resilience of the free cash flow generation. And that goes through cycles where we are a very strong free cash flow generator. And again, hopefully you get a sense from that in these graphs. In terms of capital allocation, it tends to be returns focused. Capital expenditure, we've outlined our plans for the next 4 years, which we did at the start of 2018. Very flexible in its nature. So it's not head down, invest at all costs. It is very much constantly assessing the opportunity, on both sides of the Atlantic and North and South America as well as Europe. M&A, again, we have been put under pressure by some investors, both current and prospective, is the whole idea of buying EPS. And again, hopefully you'll have seen some discipline at our end that that's not what we do. If it doesn't make strategic or financial sense, we don't buy. The capital structure, crossover credit, Ba1, BB+, with a stated leverage range of 1.75 to 2.5, and a progressive dividend, which, as you will have seen by the previous slide, supported by the strong free cash flow. Stephen, who's with me is for the Q&A piece later, is our head of development and owner of the sustainability report. But I guess from my perspective, what Stephen and his team do is make it very easy for me to sit in front of someone and say, we get sustainability and we are doing something about it. We've been doing it for 12 years. We've set targets. We've achieved those targets. And those targets are both audited and assured by KPMG. So it's not just something like a marketing tool and we can say what we like. It has to be factually accurate. It's audited and it's assured. And there's just a quick overview on our progress against those targets. When you look at even just high level, and Seb prompted us to kind of expand our thought on this, is we recycle 6 million tonnes of corrugated packaging. So 6 million tonnes of old boxes we recycle every year. So fundamentally, when you talk about are you part of the circular economy, we can't make new boxes unless we get old boxes. So I think from that perspective, hopefully you get a sense that we are part of the circular economy. We tend to score quite well from third-party certification bodies. So would be MSCI A-rated, would be top-rated in Sustainalytics in the sector. And I'm sure you guys are all familiar with those independent validations. Maybe just conscious now of 90 seconds. What the thematic stuff. So this to me is almost, I'd call it raw because it hasn't really kicked in yet. But the level of activity is intense. Seb was at our biennial innovation event in the Netherlands just under a month ago. And we had over 350 brand owners and retailers from across the world that came to the Netherlands to try and understand, what am I going to do about this whole backlash against plastic? What are my alternatives and how do you, Smurfit Kappa, play a part in fulfilling that? And the little sound bites I have to the left, which I'm not sure if the text is too small, but you kind of say, look, is it real? Is it really going to come through? The EU, and whether most of the participants here remain part of the EU in due course, we'll see, the EU in 12 months got legislation through on single-use plastics directive. That's unheard of in Brussels. So when you kind of start thinking, is this real? Is it going to deliver something? When you see Brussels getting legislation through as quickly as they do, that's phenomenal. And I think you can say this is real and it's going to stick. We've also seen countless brand owners, retailers come out with lofty goals. The key point, though, the goals aren't 2020 or 2019. The goals are 2023, 2025, 2030. So that's why I'm not sitting here saying, and as you'll see, our consumption or our volumes have gone through the roof. But what we have seen is the level of activity with our brand owners and with our customers is quite intense. And I think that's because they're trying to ascertain, what are my alternatives to my current solution? So what are my alternatives? Is it corrugated packaging? Is it carton board? Is it molded pulp, like your kind of your egg tray type solution? Is it bioplastics, or is it something else? So when they look at what the alternatives are, they're then trying to say, right, what's the cost impact? Does it satisfy what I think legislation is going to do in the future? And who will pay for the incremental cost? And then ultimately the last piece, which is probably the hardest piece, is will the consumer like the change I make? Because you might make an objective change that ticks all the right boxes from a sustainability perspective, but if your cucumber or your punnet of strawberries is still covered in plastic to prolong the length of the food, the consumer may not like that. And that's why this is not an overnight consumption goes through the roof example. When you look at kind of just really recent examples, again, Morrison's only a month ago, less than a month ago, and you may or may not have seen it, announced that they were moving their fruit and vegetable section to plastic-free. Now, that is very interesting for us, because now we want to know, right, Mr. Morrison's, or Mrs. Morrison's, what are your intentions here? How are you going to achieve that target? Iceland, counterintuitively, were one of the first people to come out with this anti-plastic sentiment back in Q3, Q4 17, following on Blue Planet. So it's intense, it's real, we're seeing it, it's getting lots of media coverage, the BBC probably more than most. And then very quickly, because of a flashing light here, what do I mean? And so when you see it, when you go to your retailers, how is this real? Simple things like that. A plastic punnet of strawberries you can do in a corrugated punnet. You look at fertilizer in Spain. This was developed where we have plastic fertilizer sheets across the agricultural market, where we've replaced it with paper. So simple things like that plastic, where you can see down at the bottom left, where the plastic over time, it breaks down and it goes into the wilderness and it stays in the hedges, where if it's paper-based, you just mulch it up and it goes back into the soil. And then here's an example where Zigafredo said to us, we've got cellophane-wrapped coffee that we put on a shelf. It doesn't look great. Can you do something for us? And there's an example of 100% paper-based packaging. And I think I have one more solution. And this is preempting a possible question. Does it cost more? Is the customer willing to pay for it? This is a fantastic example. We're using our technology Supply Smart with Scania. Our total packaging cost was, on a per unit basis, was higher than the pre-existing solution. But on a total cost basis, because we got 100% more in the truck, they saved their money on logistics. So this is, the sustainability part of our reporting shows how we're driving the ESG delivery. This is the impact, I guess, we're having with our customers, which isn't captured in the sustainability report. So that's it.
Great. Brilliant. Thank you very much, Garrett. That's a great whistle-stop tour of Smurfit Kappa. We've got a few questions now, which we're gonna fire away at Stephen and Garrett, and then we'll open it up to the floor in a little while. So the first question I had was just to follow on. You kind of sort of almost answered it, but not quite. So we're seeing hopefully this shift away from plastics and towards other materials, in particular recycled cardboard. Can you give us some data that kind of underpins that is actually beginning to happen? I mean, beyond perhaps just the numbers of people who are at your conference, which was very impressive. But just is there kind of now data that demonstrates that is actually happening, not just anecdotally, but kind of more systemically across the market? And then are you able in any way to give a sense of what that might mean to overall growth for you as a business in terms of units or revenues?
Yeah. Well, from a data perspective, I guess the level of activity that we have, so speaking to Stephen before we came to this event, I think it was 240 to 300 new incidents created in our CRM system in Q1 alone, with significant volume uplift potential. So we're seeing in our CRM system the level of activity is there.
And that might be like the coffee example that you gave.
It could be just where Zigafredo say, and I know this might sound a little bit glib, but you'll get contacted by the operations director or the general manager saying, my CEO has just made a commitment. I don't have a clue how I'm going to satisfy it. So can you help me? And I kid you not. So they're the types of conversations we're having. So you can see the increase in the level of open inquiries that we have. I think if you look at the level of commitments to signing up to pledges, which I spoke about there, it's quite evident that it's real. You can see the retailers signing up to it. Again, myself and Stephen had a probably high level conversation of what is the size of the prize. It is quite difficult to say it is X percentage. Because it won't just be corrugated, and you probably got a sense from that in our conference. We weren't sitting there saying we are the solution, just buy from us. We're saying we're part of the solution. But plastic is also part of the solution. You can't just get rid of plastic because then you have a food waste issue. So it's trying to find a balance. I think, and again, Stephen has a view on this, but when you look at our CEO sums it up in quite a simple manner that the size of the prize is huge. When you look at how big, you look at the fruit and vegetable section in a supermarket, if you just moved all the plastic away from corrugated, you'd probably have a capacity issue in the industry. So it's that kind of size. That's before you start talking about the dairy section, before you start talking about the confectionery section, or any other part, the protein section of the market. So it's large, it's not going to be overnight, it's incrementally positive, and we're very much in the thick of it.
Can I chip in a few words? Because I think in my 30 years experience in this business now, I think this is the most significant disruptive, I would say, trend or change in that 30 years. So I think we're going to see a huge development in this. I think on one of your slides it said that the EU had a lot of legislation in 1 year, which is quite exceptional for the EU to be so quick with that. So I think there is a lot of signs that indicate that we're going to see a lot of change here. And I think the momentum is there. What you didn't mention yet, Garrett, is, for example, in the customers in these larger companies, they all have very dedicated teams. Sometimes there is 30, 40 people in teams in these companies that are really only doing investigation, research to look at this issue. So I think we are at the beginning of something that is going to change quite a bit the way we do things around. But it's difficult now. It is early days, and it's not so easy to put numbers around it right now. But yeah, we are starting to track and to see how indeed, because people are starting to ask, do you have data?
Right.
Yeah.
Okay.
So what would you say are the things that really clearly differentiate your company from your competitors? You say your profile on sustainability and ESG is part of it. Is there any evidence that your customers care?
Well, to start with the first part, so the point of differentiation of our company in the area of sustainability are twofold. One is, I would say, is chain of custody, and let me come back to that in a second. And the second thing is transparency in reporting. Garrett already mentioned a little bit. Let me start with the transparency. One of the big challenges in sustainability is to have consistency in reporting and to have reporting about what a company does in sustainability that is honest and that is trustworthy and that is credible and reliable. And we started 12 years ago at the corporate level to work on sustainability, but since 10 years we have our sustainability report audited and assured by KPMG. And think about annual reports. The annual reports of companies are typically the financial element, the financial part, the financial section, that is audited. The numbers are audited. But the text in the annual reports is typically not assured, is not audited. Now, our sustainability report, and it is 90 pages, and I can tell you there's a lot of text. Every single sentence has been checked by KPMG. So you can rely on that report. And that is quite unique in the industry. So that is, I would say, one point of differentiation. I mean, I always say that if the report is not assured, is not audited, then it is a sales brochure. And even worse, if I'm cynical, it's greenwashing. And some of our competitors, they have nice stories, and then they have, if you go into the report, they have 8 numbers in the whole report of 50 pages that are audited. So judge for yourself. I think it's a very important subject, this transparency. The second thing is more related to customers, which is chain of custody. The product that we produce is made of fibers. And ultimately, the fibers are coming from wood. And then, as Garrett pointed out, we rely on the recyclability of the boxes itself. And so the first concern we have is that the raw material that we use is from a trustworthy origin. And we have, as the only company in the industry our size, we are the only company that can guarantee that all of our deliveries to customers are of that nature. And we call that FSC or PEFC, chain of custody certified deliveries. And we have been working on that system from 2011 till 2015. And since the end of 2015, all of our deliveries, not 90%, but in essence, all of our deliveries are from that source. And I think that's a very strong point, because for a customer, the nightmare is that they get boxes from us, and then suddenly there is Twitter or there is social media saying, "Oh, look, Tesco or whoever, they get packaging that is from bad origin." That is the one thing that you don't want to happen to your customers. So these two elements are, and do they care? Yeah, they do, because this reputational thing is quite important.
And I think maybe just on the business end, from a differentiation perspective, one thing that we pride ourselves on is the geographic diversity. And you kind of go, well, so what? And probably the best example was how we came out of the end of last year. You probably have all seen it. Industrial production in Germany was down. Consumption, general sentiment in Europe wasn't great. And we saw that coming through in our volumes. And then in Q1 2020 of this year, we saw volumes tick up a notch, and organic volume growth being around 2%. So people say, well, that's better than I expected. And you say, why? And it's because of the geographic diversity. It's not because Germany's up, Germany's down, and therefore we go up and down as a result. Germany went from negative growth in Q4 to flat in Q1. Spain was going like a train, even in industrial, which is one of the remarkable feats of Spain. And then Eastern Europe is going like a train. And then the same time we had organic growth levels of 3 to 4% in our Latin America and US business. Mm-hmm. So that's one of the key differentiators for us as well, is you're not saying, right, it's the UK only, or it's Ireland only, or it's Germany only. You have that diversification. When one country is maybe struggling, you'll always have another country that tends to be offsetting it.
Just a quick question. On your investor base, do you know what proportion of your investors invest in you because of the sustainable, or at least part of the reason is because of the sustainability story that you have around cardboard versus packaging and other material types? Do you have any sense, or are we the only ones?
No, you're definitely not the only ones. Well, I couldn't give you a straight answer on that. I sense it's going from tick box to a little bit more than that, depending on the fund you're talking to. And so typically the slide I showed you, when they see all those third-party validations, they kind of go, okay, I don't need to worry about that. Move on. Do you make sense as an investment, yes or no? Right. But I think it's moving on to a bit more than that. And I sense that when you talk to people, being able to show examples of what we're doing for our customers, so the impact piece that we discuss, we didn't think it was going to be that relevant, because we're saying we can't give you a number. That's our customers' benefit, but we delivered it. Right. They're saying, no, we want to hear that. Yeah. Okay. So the pressure, and I discuss it with Stephen, is, no, investors do want to hear what we're doing for our customers. So just one step away. Yeah. But it is quite intense.
I can't translate this in numbers either, but if you take 3-4 years ago, there wasn't hardly any question coming from investors related to sustainability. And I think we see a surge the last 2-3 years, or the last 2 years, in questions that we get from investors, specifically on sustainability. So I guess that's an indication as well.
Okay. So as you mentioned, Garrett, I was lucky enough to have been invited to your event in the Netherlands a couple of weeks ago, and it was, I have to say, it was very impressive. This whole thing about better planet packaging, which was the main focus of the event. It seems to me that from a sustainability point of view, you're kind of pushing on an open door there, because there's a good story around the material, recycled, biodegradable, so on, and you get to sell more product. This is part of the business case for us. So you've got a kind of a willing, the business is very willing to kind of engage with that because it's a positive story for sustainability and for the business. What are the areas, and maybe this is more for you, Stephen, what are the areas there where the business case still isn't quite there, that it's harder work for you as, with your sustainability hat on? This is an issue that we have within the business, in their operations, but it's a bit more difficult to make the business case to actually get action to address it. Can you give us some examples of what that might look like? Some of those issues.
So that challenges in the business where there isn't really a case to do.
Yeah.
Not really, I think. I mean, I always say we have the business where we're in. We have a circular business model, and we are working to take the linear elements that we still have out. And the linear elements, I would say, typically are, of course, is we use energy, we use water, we use raw material, and in the end, there is actually waste that is not our waste because it comes with the recovered fiber. And then we have to do something with it, and we're trying to recover it as much as we can, but in the end, something is left over. So these are, I would say, the areas, but they all fit in the model. So no, I don't think really we have. And
I mean, with obviously we've had this announcement, which I'm going to talk about later on, the net carbon target now in the UK for 2050. You're obviously, within our portfolio, you're one of the bigger energy users. It does take quite a lot of energy to recycle cardboard. Do you feel like you're in the right place with regard to carbon emissions and your own energy footprint?
I think so. I think it's important to note here that in our mill system, which is basically emitting 80% of our CO2, fossil CO2, over 50%, 51.5 or something, is actually based on renewable energy already. And we have been working on this for decades, but since 2005 we have already decreased the relative CO2 by 30%, and actually the absolute emissions have gone down by about the same number.
Right.
So we feel quite comfortable with these announcements where we go to carbon neutrality by 2050. We don't know exactly how we will get there, but if I look back and if I see what we have achieved so far, then I'm quite comfortable. And I think it's also important to point out, is that as a business, you don't have the luxury to invest in things that have no return. So all of these things have been accomplished within the framework of a business. So going forward, I would think that we will get where we need to be, and we're quite comfortable there. Yes.
So let's talk about returns. There are obvious exciting opportunities for Smurfit given the inherent advantages of recycled cardboard. But in your 5-year plan, it only has a clear target on the return on capital employed, but does not have like revenue or margin target. Why is that? And are the innovative packaging design that you're providing not higher margin?
Yes, I guess is the simple answer. And I guess when we look at our medium-term plan, you're right. We didn't say we will grow by X%, and we said we always use the phrase disciplined growth. So if we find there's a particular customer that might be growing at great increments, but they're quite transactional in nature and they buy on price, we say, well, that's not where we want to play the game. However, I guess to say that we don't have a margin target, I guess return on capital employed, you need to be delivering on the EBIT line to grow your return on capital employed target. So we've given a steer to the market as to what we see in terms of capital investment into the business, that 1.6 billion. And so you can, we've seen people make some fairly educated assumptions as to what the implied EBIT is to drive a 17% return on capital employed post-implementation. So I think hopefully again, I open that to the attendees here. What we're focusing on is disciplined growth, focused on returns over the longer term, and not necessarily saying we will grow by X% above the market, because what we have always prided ourselves on is price over volume. Through the secular drivers driving consumption in the industry and through us being the best at what we do, there's I wouldn't say cherry picking sounds a little bit arrogant, but we can choose the markets where we do want to grow because that's where we will invest behind. So you'll see some of the details in our medium-term plan. We're investing in digital print, so to get more added value from that. We're investing in certain gluers that cater for this packing speed that the e-commerce people want. So, you know, we didn't just say we'll invest in loads of Me Too machinery and fingers crossed the market keeps going well. We said, no, let's identify the parts of the market that are growing, that have more added value opportunities, and that ultimately deliver a higher EBIT to give us our higher return on capital employed.
Great, thank you very much. Okay, so we've already got one question. Thank you very much. Just can we have a microphone up at the front here? Pink.
Hi, thank you very much for the presentation. My name is Xuan Chan from Sustainary. It's obviously very compelling to your business model, especially now, given the whole campaign around anti-plastics and so. But as a leader in this marketplace, do you see yourself potentially investing more in this sort of wider systemic change? So I put in context to linking back to Sarah's presentation earlier on education. So if we look at this whole kind of purchasing revolution that's happening now, and it's all kind of behavioral change where now consumers have the ease to just order something online, even if they don't really want it, arrives tomorrow, as you said, and then return it or not return it. And it comes in these large corrugated boxes. And you said, that this whole e-commerce revolution where it's those companies concentrate now on speed rather than efficiency and behavioral change. So do you see yourself as a leader in this sector playing a role in educating your partners, your clients, and are your investors asking you to do that? Thank you.
Well, I'll start and then I'll hand over to Stephen. I think the answer is yes, and it's exemplified by the tools that we use. So ultimately, it would be naive for me to sit here and say we go to Unilever, Procter & Gamble, Zalando on a regular basis and they don't put us under pressure on margin. They'll say we're under pressure because the retailer's putting us under pressure. So ultimately, we have to be dynamic. Whether we want to be or we're reacting is probably an element of the two, where we have to be designing more optimized packaging for our customers. So we can say to them, like the Scania example, that you might pay more per cost per unit, but actually you're going to take more trucks off the road and you're going to increase your transport efficiencies by 100%. You look at e-commerce, I gave the example of the Hook Group in the UK, where we dramatically reduced the number of their SKUs, but it also it reduced the number of the percentage of void fill they had. So both it's a proactive effort that we use our tools when where we have prospective clients, but also with existing clients, because the vast majority of our existing clients, they're not standing still. They're under pressure from a returns perspective. They put us under pressure. So the nature of our technological solutions drives us to make them better users of packaging. So I think it's implied, it's reactive, it's proactive, it's all of the above.
Yeah, I think we actually do already what you suggest, is that we have a system where we have 65,000, 70,000 supply chains available to us. And one of our key commercial differentiators is then to provide that solution to a customer that in the end is taking away part of the carbon footprint through our packaging. So I think it would be naive to think that we go to Amazon and say, stop sending all of that material to the. What we can do is make sure that when that demand is there, that we make sure that when Amazon sends it or anybody else, it is actually, when we come in and when we get out, that the carbon footprint of that supply chain is down. That is what our purpose is, or what our our goal.
Okay, so we're going to take two more questions. Sorry, we've not left quite enough time at the end here, but I don't want to prevent you from getting your break. So we've got one here and one at the back as well.
Thank you. I'll be quick. Paul Stewart-Smith from Zero Carbon Finance. Is this working?
Yep.
Okay. So, Stephen, you mentioned that KPMG assures all of the content of your sustainability report, which is great. I wondered if you've had any discussions or do have any plans to follow the recommendations of the Task Force on Climate-Related Financial Disclosures to actually disclose your climate change risks and opportunities in your mainstream or your annual report rather than just in your sustainability report.
Thank you very much. Let's have the other question as well, and then I'll let you answer.
Thanks. Question is, broker analysts are now asking questions about packaging, the transition from plastic to cardboard and so on. How many of those broker analysts were asking questions before catalysts such as Blue Planet and the regulatory push?
So, you got that.
Well, I think the analysts have got on the zeitgeist of the Blue Planet since Q3, Q4. I don't think it was particularly prevalent for them before that. It was predominantly e-commerce and then starting to educate themselves on the impact of discount retailers. So no, I don't. I think it's relatively new in terms of the level of inquiry from the sell side.
The odd buy side, though, might have been asking these questions. Like
this is true. This is true. Ultimately, looking to see where we have solutions. But genuinely, that is where we are being asked. Give me an example on the impact, and this is why we didn't feel that was relevant because we couldn't give you a number.
Right.
But so to be fair, you were asking us to say, "But give me an example of what you're doing for your customers." You might be able to give me a number, but I can relate that to your clients to say, actually, these people are making an impact above and beyond what they report in the sustainability report.
And maybe very quickly, I mean, the short answer is, in the end, we will. Of course, we are working on that. It is very prominent on the agenda. For 10 years, we are already in CDP, so that is not financially related, but so we are following that, and we will in the end, I suppose.
Okay, I think probably we'll call it a day there.